Welcome to today's session. Today's session is all about profit hunters paradigm. Raise your hand if any of you knows about how private equity companies work. Their basic formula of working. What do they do? Raise your hand if anyone knows here. Okay, so Sapphire obviously knows. I was pretty sure of that. Private equity companies normally work on one formula. They'll buy something, some company that is somehow undervalued or something that they can buy at a good price. They will push the sales up and they'll sell it further. Okay, it's a very simple formula. They'll buy something that's 100 million, 200 million, 500 million, a billion, depending on the size. They'll push the sales up, double, triple, whichever means are used in various ways. Maybe filter the positioning or do something with the company strategically, increase the sales and then sell it on.
How do they do that, Jet? Like, how do they actually push the sales up and that?
Push the sale. Okay, so I'll give you an example. Let's say a company is in the market that's maybe doing 20 million turnover. Okay, but there is a technology coming, let's say, that's gonna, maybe they already have a technology that's gonna really kind of grab the bigger chunk of the market. But the person who's leading the company cannot see how that's gonna work. They would come in, someone in the private equity company space would know that how they're gonna push the sales up in the terms of being able to grab a market share due to the innovation in the company. Okay, and then they will go and pay 20 million, 30, 40 million for that company because of the innovation or whatever new they're bringing on the table. They're gonna use that to grab a bigger market share. Does that make sense to you? Yeah, it's like Clubhouse. At the moment, it's valued at $1 billion. Some private equity company goes in and says, you know what, I will pay you $1.5 billion. And then later on, it's valued at 30 billion or 40 billion. Does that make sense? Yeah, because people can see the potential. I personally don't see potential in Clubhouse. I think it's going to eventually disappear like many other platforms did. But I think for time being, it's doing well. Okay, but that's what it's about. But there was a reason I mentioned that. The main aim of what I'm about to share today is the profit hunters paradigm. Okay, which means that you look for places or you look for businesses or you look for things that are going to make you the bigger chunks of money. Okay, I'll tell you a story. In 2010 or 2009 or 2010, I think it was 2009, if I can remember, I was bidding for a contract, and I think some of you might already know the story, but some may not. I was actually bidding for a contract of about 4 to 5 million. It was a chauffeuring contract, and it was actually at the Sofitel in Terminal 5. You know the Sofitel Terminal 5, right? It's owned by a guy called Surinder Arora Hotels, right? This guy owns, now he owns, I think, more than 20 hotels, but back then he owned about 6 hotels. Okay, so I was bidding for the contract, but before you bid for a contract that's about 4 or 5 million, you got to make sure that you check on the history of the company. Okay, so I went online, I asked, I checked everything about the company, but it intrigued me that the company had been in existence for nearly 10, 12 years, if I can remember correctly on top of my head, but it never shown a profit, 0 profit. 6 hotels, 0 profit. I'm intrigued. I'm like, what's really happening here? I went on to check about the guy who runs the hotel, the chairman of the company, Surinder Arora. On paper, the guy was worth 225 million back then. Okay. Remember, when you're bidding for a contract that's worth 4 or 5 million, if they say we're going to keep you under a month, split 5 million by 12, that's about £500,000 roughly, just shy of £500,000 a month billing. Okay. And if they turn up and say, we're going to keep you under a month, that's $500,000 under. That means if they go bankrupt, we can go bankrupt with them. Does that make sense? Yeah. So we have to be careful when you're bidding for contracts like that. So when I learned that the company has never shown any profit, I was very skeptical to be under, which means that if you want us to provide you service, you got to pay there and then. and we are happy to provide you. So we can be under maybe 50, 100,000 pound, but we can't be under any more than that. So I bid it for the contract, but then I started digging more into the person and the company and the structure and pretty much everything. I learned that the guy used to work for BA. He was actually you walk into a BA and someone is checking your tickets, right? They issue the boarding passes, right? He was actually one of the employees of BA, British Airways. And what he did was, back then, I think British Airways was struggling to accommodate their staff. That's their air hostesses, their pilots, their other staff that works. They were struggling to accommodate them in the local region. Okay, so we're talking about temporary accommodation. So this guy did a very smart thing. He went to BA and he said, I can provide you, your staff accommodation at very, very cost-effective prices, but you got to back me up. You got to give me an exclusive agreement. Guess what BA did? BA was desperate, so they signed up an exclusive agreement with him. He took that agreement to a few investors and took 100% investment to build his first hotel. Okay, almost 100% investment. So he built his first hotel, which I think is still exists, but he doesn't own it anymore. I think it's about 100 rooms. Right from the start of sort of 97, 96, 97 period that he started, that hotel was pretty much full till he sold it maybe about 4 or 5 years ago. Okay, that's 100% occupancy with exclusive rights of BA staff. Raise your hand if you know what I mean when I say 100% occupancy with exclusive rights. Even if it's good prices, they're still very, very profitable. Yeah, and they're able to pay their investors really, really well. Yeah, okay. But what this guy did was he didn't stop there. He went on to take exclusive rights for another hotel and then another one and another one, and he built on 6 hotels based on that. Okay. Even right now, this guy has such good relationships with BA that if you go to BA today and say, I want to build a hotel in one of your internal terminals, all you're going to get is no, because that right only belongs to one man, which is Mr. Arora. Okay, so if you go to terminal 1, 2, 3 now, as we speak, which terminal is under renovation? You guys know that, right? Which one? Terminal 1 is under renovation, right?
Terminal 4 and Terminal 1. Only the terminal open is Terminal 2 and 5 at the moment.
Terminal 2 and 5. Okay, so while these terminals are getting renovated, Mr. Arora is building hotels in every single one of them. Okay, so there's a hotel going inside Terminal 1, 2, 3, which belongs to Mr. Arora. Why am I telling you a story? I'm going to come back to this, okay? He's built a hotel inside Gatwick. He's built a hotel near the O2. He's pretty much built, his strategy is prime locations, exclusive rights, and then he would take those exclusive rights and raise finance. Does that make sense? And then he would keep paying back the investors and not show any profits while he's building his equity base. Does that make sense? Raise your hand if you know what I mean here. Yeah? So those who don't understand taxation will struggle to understand this, but it's just very, very simple. You make profits, you pay back the investors, you show 0 profits, which you don't pay any taxes on, but while you're paying the equity investors back, your equity base is growing. Okay? This guy is raising billions.
What does he actually live on though, Jack? I'm struggling to see that. Does he pay himself a wage?
Yeah, he pays himself a wage. You know, 100, 200,000 pounds is a good money. While he's at the stage that he's at, he can pay himself any money.
So
but even when he started, remember, he came from a service background, which he's only making 1,500 a month.
Yeah.
And he went from that to opening a 100-room hotel. I'm pretty sure he was making good enough money to pay himself a 6-figure income.
Yeah, so it's like he's paying himself a wage. The company's not making any money, but the company is worth more and more.
No, the company is making really good profits because of exclusive rights and positioning.
Yeah.
Yeah, positioning in the sense high streets or prime location, not high streets, prime location hotels.
Yeah.
Okay. Now Heathrow inside the terminals, O2, all of that. These are all prime location hotels. So the occupancy rates are pretty high.
Yeah.
Okay. At the same time, he's making really good profits because the occupancies are high. And then what the profits that he's making, he's returning back money to the investors.
Okay.
While keeping equity in the hotels, which allows him to increase his equity base. Okay. I checked a couple of years ago, on paper, he's worth now 450 million. Okay. Great positioning, great strategy, very, very simple strategy, but very, very effective. Okay. Why did I share this story with you? And why did I tell you about the profit hunters paradigm? Like I said, I came across this back in 2009. And back then in 2009 and 2010, I had it at the back of my mind, and I need to find a way to build our first hotel. The challenge is that if you get a prime location, you pay premium, unless you find a way to sort of stand out or create some sort of unique positioning in the hotel industry. Raise your hand if you know what I mean. Yep. Yep. So this has been on top of my mind since 2009, 2010. And I remember in 2017 or 18, in that period, I actually wrote in my diary the first time that I'm going to get a hotel. Okay. And I think that dream is now about to come true. I think two people know this, two people who went with me, Lavanya and Kalpana here. That's about to come true very, very soon, because we found a place where, first of all, we can afford to buy a hotel. We are not lucky enough to get a BA exclusive rights, but we can find a more creative way to do this. We found a space where we can buy hotels as a team and on our own as well, if we want to, depending on the person, as well as we can leverage through unique positioning. Okay. To go back to you, Suraj, you were mentioning Liverpool earlier. I believe Liverpool is massively overpriced at the moment. Okay. I went to see a few properties in Liverpool. It's surprisingly overpriced. You see one property of the same size up for 100 grand, and you see next door, same size, just converted into a HMO up for 250. I saw a HMO of 8 rooms up for 300,000. I went to see it. I put an offer, rejected. 2 hours later, the property was taken for 300 grand. Massively overpriced. That property was not worth anywhere close to 300, to answer your question, Suraj. Yes, it's a great area. If you're physically there, and if you can find yourself, deals through auctions or whatever, but if you go just buy from the market itself directly, you're going to pay a massive premium. Okay. Suraj, can you hear us?
Yeah, I can. Yep. Thanks.
Yeah, so it's massively overpriced. Like I said, I've been to Liverpool at least 10 times. Okay. And I think I agreed on like 3 or 4 properties which never went through because of obvious reason, because it's overpriced and people are just mainly focused on Manchester and Liverpool. Somehow people are just paying those prices, and I just didn't want to pay. Okay. So everyone clear on the profit hunters paradigm, which means you go where you see larger chunks of profit. Think of hotels as a two-way profit strategy. One is either you find a land and you build a hotel and you run it for like a year or so and you get a commercial valuation and you sell it, or you find a hotel and you create a unique positioning, a theme-based hotel, and then you kind of run that to make it very profitable. Does that make sense? Do these both strategies make sense? Yeah. Okay. So it all depends on how you want to go about this. It's actually just one strategy kind of mixed together, if I may say. Okay. Because you can honestly, like, literally go and find something where you build a hotel, even if it is a 20-room hotel, you run it for like a year, you can get a really good premium because it becomes a commercial valuation. Okay. It's like a commercial valuation of a HMO. Okay. Instead of building a 6 or a 7-room HMO, why not do a 20-25 room hotel or a 50-room hotel? Yeah. Okay. Just so you know, guys, I am connected with a few family offices and funds where, for as long as you can prove sort of 30% profit margins, net profit margins, I can get you a lot of equity as well. Okay. So not just the conventional debt funding of sort of 85, 90%, I should be able to get you more than that, in some cases up to 98%. So imagine if you found yourself a place where you want to build a hotel, and let's say the cost is 10 million, I should be able to get you anywhere between sort of 9 to 9.8 million. Okay. And then obviously as a team, we can do quite a bit more if we work closely and sort of collaborate and get it done. Okay. Anyone has any questions?
I love that school of thinking. It's very good.
Okay.
Yeah.
So now I just want you to ponder this idea. Remember, to me, it came in 2009. It's taken me, what, 12 years to get to this place. So just because I've shared the idea with you doesn't mean you're going to get there in a day. Okay.
How do you do it on a sort of then smaller scale, Jet, with that type of thinking? Do you get me?
Okay, so you're going to observe us doing it, Harry. We are literally in the middle of negotiating a few hotels. I'm actually going back to Blackpool again in a week, in a week's time, probably the week after. So far, that's what's planned. We are negotiating, so you're going to see us starting on a smaller scale, sort of 20, 30, 40 rooms, and then we may expand from there.
What type of prices? It's like a 20, 30 room in Blackpool.
So we saw one which was a 30 room up for 570. Another one 30 room 570. We saw another one 42 room 680. And I know that you can fetch about 50 room hotels just shy of £1 million.
So, when it comes to actually purchasing hotels, is it like, is there a minimum room rate you should be going for? Do you get me? Or does it not matter?
It all depends on the location, Harry. If you go for a run-of-the-mill hotel, they are the likes of Ritz, right? I've seen the books of Ritz because, in fact, I got the Ritz to sell to someone. I actually put it out to a couple of people. They looked at the books. They said, no, we're not going to buy it. I don't know if you know Ritz, who owns it. It's a very, very wealthy family. Ritz has been in loss for a very, very long time. Okay. So run-of-the-mill hotels these days don't make actually profits. Okay. So if you just go and buy a run-of-the-mill hotel, you're going to see very little profits. Okay. You got to be more creative with it. Okay. Or you got to have some sort of strategy. Either you take on a land, you build it, and your strategy is just to run it for like a year, get commercial valuation and sell it. If that's your strategy, then it's profitable. But if you decide to just run it, it's not normally profitable. Okay. Not in this day and age, because of Airbnb, they're badly hit. Okay. So you have to be more creative. If you do a theme-based hotel, I believe if you have an effective management, they can be quite profitable till you get to a point where people start to copy you and that strategy becomes unprofitable. Okay. But that's going to take at least 10 years. Okay. But people will pick this up. Okay. People will be more creative. They'll bring in more themes. All sorts of things will happen. You'd already see people doing theme-based hotels. Okay. But that's still very, very new. Okay. And the more creative someone is going to be with that, the more they're going to be profitable. But if you use it as a combined strategy of developing it, getting a commercial valuation, and selling it, or running it as a theme-based hotel, a combination of these should be explosive growth. Okay. That's what I'm talking about. Okay. Not going to be easy. Like I said, this is something that I digged into back 12 years ago. I think I was too naive, or you can say not experienced enough to pursue that. It has taken me over 10 years to get to a point where I'm pursuing it. Okay. So please do not say that you're going to be able to pursue it right away. It's going to take you time, but I just wanted you to start thinking about it. And instead of taking 10 years, maybe it will take you 3 if you focus. Okay. Instead of going for smaller HMOs, which some of you are going, I'm not saying that's a bad strategy. What I'm saying is maybe think a bit bigger. Okay. Maybe a 20, 25, 30 room hotel. Yeah. Anyone has any questions? Okay. I'll be sharing in the coming weeks and months all the updates. on all of these strategies that I'm using, how we're working on it every step of the way. I'll be sharing it with everyone. In fact, I'll be giving a shout out to a few who I know are sitting on cash and are struggling, because if you're sitting on cash, you're losing money practically. If that is you, I'll be getting in touch with you. In fact, if you want to invest in any of these hotels, do send me a message. I'll be in touch with you specifically in the next sort of a month or two, as and when we agree a hotel, and then we go from there. Okay, that is today's first session. We have another session, but I'm going to stop recording. Thank you for watching.